Hey, what's going on, guys? This is Alex Cook. So I want to expand on what I talked about in my last video. So in my last video, I talked about how I'm fairly confident we're going to see an economic slowdown in the next 12 to 18 months. And the reason why is we have the yield curve inverting. Now, I go into more detail on that in the last video. I don't want to just rehash what I already talked about. But just to expand on it, it is a very reliable indicator that once the yield curve inverts, a recession is very likely in the next 12 to 18 months. In fact, I actually went back and looked at data all the way back to 1976, which that's as far back as I could get data, and it's only had one false positive. And that one false positive was 1998. So every other recession, the 2000 tech crash, the early 1990s recession, it predicted it. The 1980s, in around like 82, it predicted that. The only false positive was 1998. And let's keep in mind what was happening in 98. We had the Asian financial crisis. It was pretty close to when Russia defaulted on their national debt. And then you had the LCTM hedge fund blowup, the long-term capital management hedge fund blowup, which caused a lot of financial shockwaves in the U.S. So there was a lot of turmoil in the market in 98, even though it didn't lead to a full-blown recession. So point being, it is a very reliable indicator. So what could pull back if we do see a recession right now? So one of the big drivers of economic growth since the 2008 crash and the bull market that we've seen since then has been technology. So that's actually kind of the first place that I would look, because we just haven't really seen too many new, great, innovative ideas in the last half of this decade, if I'm really being honest. A good book about this is 0 to 1 by Peter Thiel. Like, I'm not seeing new Salesforce.coms. I'm not seeing new Starbuckses or new Microsofts. What I'm seeing is like yet another Tinder clone, or like, yet another Uber clone. Now, Uber's cool, like, Lyft just went public, but, what valuation does this stuff really make sense at? Do we need like 30 million different types of dating apps? Like, how much value is, I think the latest one is called like Hinge or something. Like, how many new Tinder versions do we need? Like, what real economic value is this adding? So I would look at the technology space. You have some publicly traded companies that are trading at very, very high price to sales multiples when they're not even making a net profit. Now, they are growing the revenue very aggressively, which is good, but they're still burning through cash. Now, I've been wrong on this a lot. I was wrong on Tesla because, I thought Tesla was overvalued back in 2017, 2018, and it kept going up anyways. So there's times when A, may be overvalued based on every historical, financial theory that we know, but it keeps going up because the market's still in a bull run. But my prediction, and again, let's check back on this video 1 to 2 years from now to see if I was right or not. My prediction is that this high valued technology is going to start pulling back. So this is the first place that I look. All right. Second thing, let's look geographically. Where has technology created a lot of economic activity? And the big one is Silicon Valley itself. So let's take a look at San Francisco Bay Area and the surrounding communities like San Jose. So real estate prices there have gone just insane. Like it's gotten insane, especially like if you look like quality of life in San Francisco, by, a lot of studies, a lot of reports has really gone down a lot. Not to side rail this video another topic, but the reality is quality of life has gone down, yet the real estate prices have not yet reflected this. So I think we could see a correction. Now, again, let's check back 2 years from now, see if I was right or not, but that's what I'm thinking. So third thing is banking. Specifically, when you look at real estate or even technology type investments, some is debt financed. Real estate, I shouldn't say some, pretty much every real estate investment is debt financed one way or another. So banks that have invested, have made debt investments, made loans to real estate developments in very fast growth communities like the Bay Area where real estate prices have gone insane, that would be a third order effect that I could see pulling back in recession. So those are three things that I'm looking at for this current environment. But I also want to talk about just in general terms, what pulls back in a recession. So there are companies that we call cyclical companies. That is a key term. That is something that in finance and economics that we use to talk about these type of companies, meaning that they follow market cycles. So when the economy is booming, you usually see a lot of construction. You usually see a lot of demand for energy. and you usually see a lot of demand for base metals, like base commodities. So those are three things that are pro-cyclical. Like when the market is in a bull cycle, they do very well. Conversely, when the economy is doing poorly, they pull back. So when people are in a recession, there isn't much new construction going on. These things pull back. And also as a second order effect, look at the companies that service them. So like the Caterpillars of the world, people that sell products to these companies, oil field services companies. Like Halliburton is not an energy company. They don't sell oil, but they are the ones that actually do the drilling. So that is a second order effect that could pull back as well. So hope you enjoyed this video. This recap on why I am concerned about the yield curve, what could pull back in this current environment in a recession, and in general terms, what could happen in a recession. So I got a lot of comments, got a lot of direct messages from my last video that I made. Do me a favor though, is that if you have a question, leave it in the comments, because if you have a question, probably a lot of other people have that question as well. I got a lot of direct messages, which is great. I like hearing from you guys, but just keep in mind, if you have a question, probably someone else has the same question too. So just a way to give back to the community, help people out. So if you enjoyed this, hit subscribe for more. I'm also going to start posting on Instagram TV, just another way to get my content out there. So you can follow me on either one, on YouTube or Instagram TV, but thanks for watching.